Good evening, everybody. I will bring to order the special open council meeting for Monday, December 13th. I'm going to start with a territorial acknowledgement. I'd like to recognize I'm grateful for the opportunity to live, work, and play on the traditional territories of the Sinchothan speaking peoples, including the Sartlip, Sayout, Puckatin, and Sakem First Nations. I'm going to move to item number 3, which is approval of the agenda for this evening, 3.1. We've got a recommendation to approve the agenda as presented. Moved by Councillor King, seconded by Councillor Newton. Any additions? Seeing none, I'll call the question. Are there any opposed to the motion? Thank you. The motion carries with none opposed. Item 4.1, motion to convene committee of the whole. We've got a recommendation here. Moved by Councillor King, seconded by Councillor Newton. Any discussion? Hearing none, I'll call the question. Are there any opposed to the motion? Motion carries with none opposed. Item 4.2, the 2021 Asset Management Plan update. We've got a report from the Director of Financial Services. I'm going to first go over to Ms. Cullum for the introduction.
Thank you, through the chair. I'd like to introduce our consultant that's also here with us today, John Wenninger from Urban Systems. And Mr. Ziegler is going to make the initial council presentation, and then we're going to have a presentation from Urban Systems, who we've been working with over the last 8 months to prepare this report for you. Please, Mr. Ziegler.
Thank you, Ms. Cullum, and good evening, Mr. Chair and Mayor and Council. I'll just bring up my presentation here and share my screen. How's that? Can everybody see that? So thank you again. Good evening, Mr. Chair, Mayor, and Councils. Tonight's meeting is the start of our first 5-year update of the district's asset management plan. I'll refer to it throughout the presentation as AMP, Asset Management Plan. To start out, I wanted to say that our asset management plan shows the district's commitment to good governance and the plan and financial strategies for managing our infrastructure needs. Asset management also supports our service delivery by enabling council to make informed decisions about services. Thanks to the staff and council back in 2017 for implementing a thorough and comprehensive plan, many municipalities still do not have an asset management plan. We're not in a unique position in this regard for our assets. All local governments are currently facing or faced with increased infrastructure costs with limited sources of revenue. An important success factor to long-term plans is being committed and sticking to them. So thanks to Council for your commitment to the plan over the last 5 years, while there have been other financial pressures. Tonight's meeting is just for information, and that there are no recommendations from staff or decisions to be made. And it's the first of several meetings we'll have before the update is adopted and any changes to the financial approach are made. I have a brief PowerPoint presentation which I'll go through and then turn it over to our consultants on this project, Urban Systems, who will go through things in more detail. Afterwards, we're certainly happy to take questions on the presentations and my staff report. So the purpose of the asset management plan update are a few things. Number one, to review the results of the plan over the last 5 years, what we said we were going to do and what we've done regarding annual funding levels, replacement plan spending, and financial planning for the future. Of course, we're looking at updating our asset life cycles and replacement values as they change over time and construction values increase or have increased. Review the funding financial approach, And this also assists in developing our long-term asset replacement plans for the future. In 2017, we implemented a financial approach that was to take us from total funding per year for asset management replacement of 4.23 million to 6.24 million over a 15-year plan. Back then, there was options put forward to council being a minimal, moderate, or accelerated approach for each category of general assets, water, and sewer assets. At the time, the minimal financial approach was taken for general assets, which was a 1.25% tax levy each year. And for water and sewer, a moderate financial approach was taken with a 1.5% water rate increase and a 5% sewer rate increase. How have we done in that regard? In the annual funding, again, in 2017, to go from 4.2 million to 6.2 million over a 15-year plan. In 2021, our actual funding in the budget for asset management replacement was 5.7 million. So on the funding side, we're doing well. That funding has been increased for both general water and sewer up to 5.7 million. That number is increased slightly as well because some debt that we had back in 2017 has been paid off, and that annual funding can be redistributed to asset management. On the spending side, from 2017 to 2020, our average actual replacement of capital assets is approximately 2.6 million. Our road surfaces has benefited from an annual replacement plan, which has improved overall condition from a C to a C+. Our water, sewer, and drains overall condition, however, has deteriorated due to the lack of an annual pipe replacement plan, or the project simply replacing those pipes, asbestos concrete, steel pipes, and other pipes that have an end of useful life. Annual underground replacement plans for water, sewer, and drains are critical to our asset management plan success over the next 10 to 20 years. The summary from 2017 to 2020 on total cost, total asset replacements for all of our assets in 2017 was 264 million, requiring a $6.2 million in average annual funding. In 2021, our results, the updated asset replacement value is 565 million, so a significant increase there, requiring now a 10.76 million in annual funding. That increase is primarily due, and again, our consultants can talk to this further, but construction cost increases and the additional assets that have been added to our system over the last 5 years, both assets that we've built and donated assets from development. The themes that our consultants will speak to more in detail, which I'll go through here quickly, are the annual funding needs have increased due to a higher value of assets requiring a higher average annual replacement value. Some large investments are required for our facilities. Our municipal hall site and public works yards are nearing the end of their useful lives. Annual replacement plans for water, sewer, and drains. Required road rehabilitation is required in the future. We have been doing resurfacing, which has maintained the roads very well. However, in the 2030s and 2040s, is expected that to be more costly, full rehabilitation of the roads. Potential future capacity constraints in the water and sewer infrastructure. And the current funding approach does not include funding for new infrastructure. So those are the primary themes, again, that Urban Systems will talk to in more detail. Again, a bit of the agenda for the project going forward. Tonight, we're reviewing the progress to date, which I've just gone over, and the themes that have come out of the asset management update to date. In the new year, we'll be presenting an updated AMP and recommended financial approaches for council, as well as communications to educate residents on where we're at with asset management and things that will happen in the future. And again, strategies will be brought forward for council consideration for implementation of the 2021 AMP update. Thank you for that. And I'll turn it over to Mr. Weninger regarding the urban systems presentation.
Hi, good evening. Thank you, Troy, for that. And thanks very much to Mayor and Council for having us here tonight. I'm going to co-present here tonight with my teammate, Laura Bernier. So we're going to take a bit of turns going through the slides. We've got quite a bit of information to get through. So if it's okay, we thought we would move through it at once and take questions at the end, just to make sure to make the best use of everyone's time. So if that's all right, we'll move through it, and then happy to have a larger discussion at the close of the meeting. Yes, I'm John, and I've been working with Troy and Christine on this and the rest of staff for half a year, a little bit more than half a year, and learned a lot about your community. Been there a few times, and yeah, really enjoyed the process of getting to know you all. I'm going to turn this over to Laura then. Laura, have you got the, is Laura able to share her screen for this?
Yeah, I just entered screen sharing. Can you guys see the presentation?
Okay, yeah.
Okay.
We did a little bit of a shuffle. The content's the same as what if you in your agenda, but we might have reordered it just a little bit to make it a little more easier for us to talk through. So I'll leave it. Laura's going to do the initial part of the presentation, and then I'll step in here in a few slides and go through some of the more details.
Thanks, John. Yeah, good evening, everyone. My name's Laura. I work with John very closely here, so I'll just go through some of the higher level slide deck in the beginning and then pass it over to John a little bit later. So yeah, very much looking forward to sharing our work to date with you at this first workshop. Obviously, this was a part one in kind of a multi-part discussion around the Sustainable Asset Management Plan update and the long-term financial plan update that we're working on. So today we'll be focusing on the Sustainable Asset Management Plan update. So I'll present that high-level overview of our progress to date, and John will dive into some of the more technical components in a little bit. So yeah, we'll just, in the interest of time, as John mentioned, we've got quite a few slides here, so we'll just save the questions and discussion for the end, and we can have a more fulsome discussion around any questions you might have then. So in terms of what we've been seeing to date, just to provide you with a brief overview, obviously this is a lot to digest, so we'll do our best to unpack this as we go. But the real takeaways here in our work to date is that, as Troy has mentioned, the annual average funding needs have increased quite significantly from 2017 for most of the asset classes that we've seen. There's going to be some large investments that are required for your facilities over the next decade. We've seen, as mentioned, the investments in the chip sealing and overlays on your roads has extended their life quite a bit. There's going to be the need for some costlier rehabilitations in the future, so that's something to be aware of. And then we are seeing that, aside from the roads, other types of materials in the water, sewer, and drainage systems, so those materials including asbestos cement, vitrified clay, and corrugated metal pipes, those are in need of replacement over the next decade. So you'll see some significant costs in those programs as we go through the presentation. And then in terms of water and sewer, there are some capacity constraints within those systems, and that might hamper your future development and growth within the district. So as previously mentioned, again, that the funding levels, they don't provide any considerations for new infrastructure needs. These are really just the funding levels that are needed to maintain your current infrastructure as it stands. So here's a bit of a breakdown in more detail to that replacement value that Troy mentioned earlier on. So the current replacement value for all of your assets is just over $500 million. So obviously there's a ton of assets that go into that, and we looked in detail at all of those thousands of assets in those inventories. And at a high level, this is everything that the district is responsible for. So obviously this is a relatively large number, but you're in good company. So this is all just about making, good decisions around those assets, which provide a ton of value and services to your community to make sure that you're extending their life cycle and making the best decisions possible. So we see here, water and sewer account for a lot of those assets, as well as drainage and roads. Facilities account for quite a few as well. We've taken a bit of time to break down some of the average funding needs from the last plan to the current plan. And I'll gloss over these slides, not because they're not important, but we do have a visual that I think shows them very well. And then we've also taken a look at what the actual spending that the district has been doing to date within these programs. So I'll just click through to this slide here, which really just puts those numbers on a graph. So as you can see in gray, we've got the actual spending for each of the asset classes, which in some cases compares to the funding needs, and in some cases it's quite a bit lower, especially for drainage and parks. In red, we've got the 2017 Sustainable Asset Management Plan values. So those were the funding needs that were identified in that plan 5 years ago. And then in dark gray, those are the funding needs that we're identifying today. So you can see that there's quite a bit of a gap in some of those needs. Those costs have escalated in the past 5 years. And that's the real takeaway here, is just moving the dial to continue tracking towards the sustainable funding levels that are needed to keep funding the assets that you already own. So we'll dive a little bit deeper into kind of the how to get there when we get into the long-term financial planning pieces. Okay, great. I think that's just a little bit of the recap at a high level. So I'm going to pass it over to John now, and he's going to provide a more detailed explanation of what's happening within each one of these asset classes.
Thanks, Lauren. Yeah, if you don't mind advancing. So I guess Laura's given the spoiler on the presentation. So that's the main themes have already been provided here, but I'm going to get into some of the details on the specific asset classes and just give you a little bit of overview of where things are at. So we looked at the utility assets, so the water and sewer, and we also looked at assets funded within the general fund, which Laura had summarized on the previous slide there. So I'm going to go through asset class by asset class, and I'll start with the water system. So what we did in the process here was we actually did quite a few meetings with staff, the folks within your organization that are on the ground, that are dealing with these assets on a daily basis, and got their input on it. And we also had I guess I would say a desktop review, looking at the full inventory of the assets, the age of the assets, the materials of the assets. And we've tried to bring those together to get a bit of a snapshot. So at a high level, what we really learned about the water system is, in the opinion of the folks that are operating it and staff, and looking at the profile of the pipes and the ages of them, it seems the condition is dropping a bit. And I think the main reason for that is because we're seeing failures within a lot of that asbestos cement pipe. So these are affecting you in a couple ways that are negative. One, of course, is when you have an unplanned failure like that, you have to go out and react to it. It could be in the middle of the night, you could be paying overtime. It's not planned, it's disrupting services. So that's important. It's probably causing damage to your roads that need to be repaired when you have those failures. But another thing I think to consider as well is, in these pipes, they may not just fail right away. They may be leaking, and you're paying for that water from the regional district because it's metered to you. So those are some reasons where, one of our recommendations is going to be to really look at some of those pipe materials and get a program to replace them. We also found there's the smaller diameter pipes in the system that wouldn't meet the minimum standards of today. So that's given you some, and a lot of these are the same pipes, the asbestos cement. A lot of them are smaller diameter, which I would say would be less than 8 inches. They may be 6 inches, 6-inch pipes that are asbestos cement. So that's constricting your ability to meet some of the fire flow requirements in the community. And also it's depending on where they are and what their role in the system, it could be also limiting your ability to accommodate future growth. In terms of the other facilities in the water system, nothing really stood out other than there was one pump station which was felt is required to be rebuilt and should be a priority. So overall, indications were that the condition of the pipe system has degraded somewhat over the last 5 years. The other assets are hanging in there, but definitely will need some attention as well moving forward. So next slide, please, Laura. Yeah, so just to give you an idea, and this is typical of most of the assets that you would own, in municipal infrastructure, we're dealing with assets that last a very long time. And with anything that lasts a long time, you don't really have to do much, invest much in it for the first 3/4 of its lifespan. But then all of a sudden that starts creeping up on you. And I think that's what we're seeing here. So this graph shows our forecast of how, based on the ages of the pipes, and this is, I think, more figurative rather than exactly accurate in the years it happens, but it shows where we would predict you might need to be spending money or where you might need to be replacing these pipes based on their age. So that's what we're seeing along the lower axis is the year. On the vertical axis, you see the bars. Those are in those given years, which pipes theoretically we would think might be prone to failure. So you can see there's a big clump of those actually in the next decade. And those are primarily those asbestos cement pipes. So the two lines we see on the bottom, the red line is the funding need that was identified in 2017. Now, as part of this project, we've updated all the replacement costs, updated the whole inventory, and recalculated what our estimate of the annual funding need would be. And you can see it's gone up significantly from the $825 to the $1.5 million annually. So you can see, as you get out in the far side of it, there's a lot of, after you replace those pipes, that funding need continues. And that's those years generally you'd be putting into reserves so that when you had these time periods where you had large replacements, you'd have those funds available to you. Like most communities, I haven't come across many that would actually have done that and had that much money waiting in reserve for it. But I think that's the theme that we need to be aware of, that we're going to have to address it. All communities are not just your community here, but all communities in Canada or in North America, I think, are running into the same kind of thing. The assets are wearing out, and there's going to be a bit of a crunch here. And that's the point really of this project. Let's bring awareness to it. Let's talk about it, and let's think about what are the best decisions we can make here going forward, knowing that this might be ahead of us. Thanks, Laura. Yeah, just to recap, some recommendations we'll have, and these will be in the report, is to update the water master plan. Let's have a look. The master plan generally deals with capacity constraints. So I think that's an important one to use aside, an asset management plan or replacement plan. So if you're going to replace pipes, let's be really think about it and make sure we're doing the ones maybe that give us a double benefit. Maybe those that help with the system capacity and are also, the pipes that might fail. So this is where good planning and having good plans in place can really help optimize the dollars that you're spending. So along with that, really think you want to prioritize the replacement of those asbestos cement pipes for a number of reasons. That material you don't want to be in an emergency repair situation, because when you saw cut it, you could be releasing asbestos fiber in it. So it takes a little extra caution. It's good practice, I think, in any case to get a program to remove that from the system. So in addition to the asbestos cements, it would be looking at that one pump station and prioritizing that. And then just overall, I think thinking about long-term to support development, where are the capacity constraints? And again, that would come back to the master planning piece, but just keeping that in mind. Thanks, Laura. Okay, the sewer system. Had a good look at this as well. Some of the same issues, what we heard from staff didn't seem as much that the condition, they were seeing as much of the impact on the condition here, but it is aging, it's 5 years older. So they didn't feel there was necessary to downgrade the condition assessments there. But what we did here, and this would be very typical, those older mains are susceptible to joint separations and to damage, where you're going to get tree roots into the system. And this is going to cause you difficulty with backups into private property. And also, similar to water, when you've got gaps in your collection system, you're getting water coming in through those gaps, that is all getting metered as it goes back to the regional district. So you're paying for that water to come into your system. So there's definitely economic benefit to getting on top of these things, even though it's a little bit of, it's extra cost definitely in the capital, but it adds up over time when you're not paying for that infiltration into the system. Another issue we heard was there are mains that are difficult to access, and these might, either they're on private land with limited access, or they're just difficult to access in general. Those are a concern that needs a bit of attention. Again, like with water, there's some smaller diameter, quite a few smaller diameter pipes, and these are much more susceptible to blockage than larger pipes. That these need to be looked at. And then in terms of the facilities, the big one was that Brentwood Bay pump station, the replacement of that. And I think, most, you're all aware of that one, and that's quite a large investment item that's coming up quite quickly here. So thanks, Laura. So similarly, we've done a replacement forecast, again, the same as with the water. And it's a very similar story. And this isn't just for your community. This is, I've looked at dozens of communities, and we're seeing a very similar trend. Most communities used asbestos cement during the 60s and 70s, and they're experiencing exactly the same thing. They're getting increased failures, and they've got programs in place to replace that pipe. And that's what we're seeing here. It's a very similar theme. So you can see the red line there showing what was in the 2017 report. And then the line above it is our current estimate of what the average annual funding needs are. So I just want to take a second to distinguish the funding from the spending, because they're not always the same. In fact, it would be rare almost where you'd be spending and funding at the same level. The funding is just on average, here's what you need to sustain that infrastructure over its lifespan. And that's going to vary through the lifespan. So some years you're going to be spending more, like that may be happening here according to the forecast. We're predicting that you will need to spend more as some of those pipes start to frequently cause you problems, and you need to address them. And then there's years where you're not spending as much, and those are the years where funding the reserves is really important, so that when you do have that uptick again, you're ready to address it. And I didn't mention in the last slide with the water, you've got a lot of sewer infrastructure, $135 million worth. That's a lot of money. I think the water, I didn't highlight the number there. I think it was about 105, if I recall, if my memory serves me. So yeah, it was 105. So, between the two of them there, that's, water and sewer infrastructure, you've got $240 million worth of assets. I mean, that's a lot. That's a lot of infrastructure that needs to be thought about, maintained, and funded. And that's what we're having this discussion on today. Thank you, Laura. So again, some of the same main themes here, similar to water, that Brentwood Bay pump station needs to be addressed in the force main, and that's in your capital plan. And again, I think we felt a program is really needed here to address some of those pipe materials that are causing problems. So with the water, it was mainly asbestos cement. In sewer, you also have vitrified clay pipe, which is subject to a lot of joint separation and issues with the way it's put together. It's good pipe, but it's probably causing some infiltration and some roots coming in, as well as the AC pipe. So it's thought like over the next 10 years to really get a handle on that. And again, there's some smaller diameter pipes, just as in the water system. So there's some 6-inch diameter or less pipes in the system, and pipes where there is limited access. So again, it's getting that, the recommendation is to get a plan in place to look at those, to prioritize those pipes over the next decade. Thanks, Laura. Roads. Okay. Well, this is actually, I think, a good news story here on the roads. Your roads are actually in pretty good condition, and had to actually look at this a few times, because when we looked at the age of the roads that you've had, you're really getting good lifespan out of them. I think that's really hats off to your staff there and the folks that are making good use of the money that's been allocated to them. So they're using some techniques that I think have been really successful in extending the lifespan of those roads, including chip sealing and overlays, without having to rehabilitate the base or do a full surface reconstruction of those. That said, there's eventually a point where those types of techniques aren't going to be effective. So they're working well for you now, and you've got a pavement management plan that was in 2013 that's being followed, and I think it's been doing a good job. But as I'll show in the forecast, we're kind of predicting that chip sealing and overlays will not be as effective after you have to do it numerous times. There's going to be a point where you're actually going to have to reconstruct the surface of the road. And that's the surface. The base is generally good. The road bases are generally good. You do have the exception of that Keating Crossroad, which came up a few times in conversations. That probably is going to need what I'm talking about here. What eventually will happen in a lot of the other roads is you're going to have to do a more costly intervention on it. And that's one road that's probably going to need some looking at. So doing frequent overlays is not cost effective at a certain point, and you're going to need to have a good look at the best way to reconstruct that. So here, just sorry, Lori, just back one there. So we've actually seen, according to input from staff and what we've looked at, the condition and performance has actually improved somewhat over the 2017. And I think that's a really good demonstration of where you kind of put the focus, put that the investment in. It does pay off for you, and I think we've seen it here on the good works that's being done on the road system. I think a similar theme on the water and sewer, you'd see if we looked at this in 5 or 10 years, that would really help move the dial on these assets, just as it has on the road system. Thanks, Laura. So here is a forecast. I mean, and it's like, let's take it for what it is. We don't really know, but given the age and what we know about the assets and the performance of these assets, there is an expectation that eventually you're going to need a more fulsome reconstruction of those roads, whether it be the base or whether it just be a full surface replacements or more costly interventions than you're currently using. So that's what we're seeing here. So the red line shows what you're funding at or the funding need, and I think you've done a pretty good job of meeting that, and it's been coinciding with kind of what you'd expect. Again, I think as we get out another 20 years or 15 to 20 years, there could be, or likely is going to be some more costlier interventions that are going to be needed. And that's what we're showing in that upper line, that the 2021 funding needs of 1.9 million, which are quite a bit higher than the 724 from 2017. Thanks, Laura. Yep. Yeah, so just in summary, the recommendations here are update that pavement management plan. I think it's been working well for you. It's probably time to have another look at it. It's 2013, so it's pushing a decade old here. You probably want to have a look at it every, well, maybe even 5 to 8 years, depending on how things are going for you. Continue doing what you're doing. I think good job right now on the resurfacing, but maybe have a little bit of a look at, maybe boost it and put a little in reserves in anticipation, moving towards that funding level that we've identified here. Have a look at that Keating Road to look at the most cost-effective way to reconstruct it, because there's coming a point, I think, where going in and resurfacing too frequently is not cost-effective. And I think the indications are you might be reaching that point with that road. And another recommendation is to try and more closely align what's happening with your road surface with the utilities, so they're not being planned in isolation. Again, that's optimizing. So if you're going to go into a road corridor, have a look. Is there small diameter asbestos cement pipe in that corridor? Is there a priority type of replacement in it? And it might make it a bigger project, but it's more cost effective, to address it at that point. Okay, drainage. Okay, this is kind of, I guess, a similar story to the water and sewer. I think we're seeing, in the conversations that I've had and what we've learned about it, there have been some failures that have been quite costly to some of these deeper culverts. I think you had one in the last year or two that was in the hundreds of thousands. And when those happen unexpectedly, that's a major disruption depending on where they occur. If they're under a road or a major road, disruption to the surface of that, to the community, and also much more costlier to address. So the feeling was you've really lost some ground here. That hasn't been a good amount of investment into drainage, which is not unusual in communities. It's unlike water and sewer, where they're funded through user fees and their own entity. Drainage has to compete with emergency services, with parks, with roads with so many other things that it often gets neglected in terms of funding. And I think we're seeing that a bit here. Again, that's very common in communities. It's not anything that I would say is unique to your community, but it's something everybody's, our communities are having to come to terms with. Another issue in the materials, again, another material used in drainage that you don't really see in sewer water is that corrugated metal pipe. And I think we all know what that looks like. It's not very thick and it doesn't last that long. It was very typical material to use in culverts and drains. So that is starting to reach the end of its life and you're getting some failures. Yeah, I think that's most of that. Let's have a look at the forecast, Laura, there. So kind of, again, similar story here, although I think the drainage does need some more immediate attention. Something I think needs to really have some thought put into sooner than later. I don't think you want to be dealing with $100,000 to $200,000 unexpected failures in those deeper in some of those culverts going forward. So I think it is something that needs to be looked at in a bit more detail. And again, this study is pretty high level. We're talking to staff. We're looking at the age of the assets, but we're not going out and physically looking at each location or anything on the ground. So it's pretty high level, but I think the story is clear here on it. Yeah. So again, we're looking at a higher funding level than what was recommended in 2017. Our funding is looking at about 1.7 million a year, and that's to address an asset value, of $114 million. So when you think about it, if you have, the $100 million of assets, $1 million a year, that's only 1%. So it kind of makes sense. In 100 years, if you think it's going to last 100 years on $1 million worth of investment, that's 1% of it. So you're kind of betting that things are going to last 100, where they're probably not going to. That's where we come up with the 1.7. It's going to be less than 100 years in our estimation. So eventually that's going to need to be replaced, and the funding, you're going to have to address the funding in one way or another, whether it be through reserves or getting on top of it now, or through debt or other means going forward. Thanks, Laura. Again, a similar recommendations here. Keep those stormwater management plan, keep that up to date. A lot of changes in that area. And I think with the climate change and some of the events that we're seeing, I think a lot of communities are recognizing we have to have another look at that. So that's a recommendation. I think in terms of how you spend, I think having a good assessment of those higher risk culverts where we've had those failures in the last year, large diameter, deeper culverts, would make a lot of sense. They're a bit harder to assess, but when they fail, it can be quite catastrophic to you. And then similar to water and sewer, just getting a replacement program into some of those priority pipes, especially that corrugated metal. There's also concrete pipe that doesn't last as well, and there is some clay. So I guess the message here is just take stock of what you've got, get a plan in place, spend your money wisely, prioritize where can we spend the money. It's a lot of money. We recognize it. Let's spend it in a really smart manner that's going to minimize our risk and is going to give us the biggest bang for the buck. So the same story for water, sewer, and drainage is just really plan well how we're going to spend those funds. Let's get the best bang for our buck out of them. Thanks, Laura. Okay, facilities. This is an area where there is, and I think you're all aware of it. You've got a few really key assets in your inventory that are going to need some investment. City Hall, 1903 Mount Newton. We know it's on the plan. That's a large investment that's looming. Also, the Public Works Yard is coming up there. Those are big assets, and it's going to need some thought as to how you're going to fund those or what the best way to approach those are. So, I know that work's in process, so there's nothing I'm saying here. I think that's not already on your minds. In addition, I guess there's 2 district-owned docks to be thinking about, but I think the main things in terms of what really is going to be the funding challenge is City Hall, Police, 1903 Mount Newton, and Public Works. I mean, those are the big ones that are going to need to be funded, and they're a big part, I think, of the conversation around facilities. But of course, you have a lot of other facilities as well. But in terms of looming investments, those are the ones that came up and were really on the radar. Thanks, Laura. Yeah, and that's what we're seeing here in this replacement forecast. Big investments looming in the next 15 years or so, and then you get over that and you're okay for a while. But I think I think the big conversation now is how do we address this? Particularly these 2 large investment items that are coming at us in the next decade. Thanks, Laura. So just in conversations, in terms of funding, I think, and I know this conversation is going on, is how are you going to fund those building replacements? And there's going to need to be some debt. So there's just going to be some trade-offs of how you're going to approach that. And I know that's another conversation that we'll get into in the step 2 of this. And I know you're in the process now of looking at the different studies and the options in place for these, and that's ongoing. That's for 1903 Newton and also for the Public Works buildings. So thank you, Laura. Move forward. Okay, parks and trails. Similar. We didn't have to be honest, there wasn't as much information on this as the inventory wasn't quite as detailed as some of the other asset classes we had, but we did have conversations around this. And in terms of maybe some of the challenges, maybe it's not so much condition, but also the capacity side of it and the funding side of it. As you grow, do you have the parks assets that you need to contribute it to the health of the community? That was one of the themes that came up, and I was thought maybe we're slipping a little bit in that area. Thanks, Laura. Here is our forecast. I think what we're seeing here, this one looks a little bit different because it's kind of weighted towards the future, and that's because some of the assets are in really long-lived. You've made investment like in playing fields and ball diamonds, which are expensive to build up front, but they do last a long time. But eventually will have to be rebuilt. So some of the bigger investments you've made in those are really long-lived assets, and that's why we're seeing that pushed out to the far right on the chart here. Yeah, and we've come up with a number of around 300,000 a year on about $17 million worth of assets. Thanks, Laura. Yeah, so again, capacity was a theme. So a master plan on parks would be probably timely to be coming forward. A good replacement program, and maybe some targeted maintenance to help to extend those assets. Thanks, Laura. And here's the last asset class, I believe. You've got a lot of vehicles. A lot of these are, this is not only vehicles, but also equipment, larger equipment, mobile equipment. So these are generally well planned for, and your inventory of this is very good, and there's a good replacement plan, it looks like, in place. There's some large, of course, items in there that loom, especially around pumper trucks and fire equipment. They're really large assets, again, that need to be thought about and planned for and saved for. A lot of the other stuff, you're continually replacing pickup trucks and smaller mobile equipment, but there are some large assets in there that you need to have your eye on. I guess some thoughts about that came up in conversation about moving to more electrified vehicles and keeping that on the radar, and what the infrastructure would need to be to move in that direction. Thanks, Laura. So here, a little bit different looking forecast, and I think it just shows that these assets last 10 to 15 years, so we see just a repeating cycle of them. So we're looking at about $20 million worth of vehicles, and an average funding on those of about 1.6 million. So that's a bit of an increase over what was in the 2017 plan. Thank you, Laura. Again, so just keeping on top of your fleet, the management of that fleet, looking at electrification, the options for that, making sure your fleet got the right types of vehicles in place, and you're considering the move to electrification going forward. Okay, so that's the lot of the detail, and thanks for bearing with me through that. I know it was a lot of information. I guess I'll just recap kind of what I think the main themes here that we're to be thinking about. We've seen, as you can see from the charts, there is larger funding needs than what we had in the 2017 plan for most of the asset classes. In particular, there's in facilities, you've got some really large investment needs that are looming in the next decade that are going to need to be thought through. The good news of it is, like, we're seeing when you do make the investment and you're proactive, that it's making an impact, and we're seeing that in the roads, and there's been good work there in maintaining those. However, there will be a point to be thinking about when costlier interventions are going to be needed, and not to wait till that occurs at once, but maybe start to ramp that funding up in advance. In water, sewer, drainage, you've got some pipe materials that are going to need some attention over the next decade or two, and that's similar to almost every community that I've worked with. So nothing new there, but just something to be aware of, and time to think about getting those programs in place and being proactive on it. Similarly, you've got some capacity constraints that I think you want to think about in tandem with that replacement program. So make sure you're spending the money in an optimum manner. And then just to reiterate that the funding that we're identifying in here is just replacing what you've got. So this isn't new infrastructure that might increase service levels or new infrastructure to accommodate growth. We're just dealing with just maintaining the infrastructure that we have. Thanks, Laura. Yeah, so just a recap of where we're at then in terms of the next steps. We've just presented to you in December, we've given you an update on the asset management plan itself. And so in that portion of it, we've looked at the assets, the value of the assets, the lifespans of those assets, and the funding needs. What we haven't really addressed, which is we're starting to get into now, is okay, what do we do about it? How do we fund it? What are the implications? And I think that's probably where you're going to be you're interested in all, but that's where the actual implications in terms of taxation or user fees, the decisions that have to be made will come into that. And we're hoping to complete that work and inform you about some of the options or scenarios in January, get some feedback, and hopefully we can get those both finalized in February, so in the next couple months. Thanks, Laura. Yeah, so thanks for bearing with me through that. I think we're happy to answer questions. I think at this stage, we'll share some of the questions with staff who are probably intimate in some of the aspects that might have been contained in there, but we'll work together to address your questions as best we can.
Thank you, Mr. Weninger and Ms. Bernier. I've got a couple of speakers on the list already for questions. First, I'm going to go to Mayor Windsor, and then I've got Councillor King.
Thanks, Chair. Appreciate the presentation from our staff as well as Urban Systems. Starting off, this is obviously an enormous amount to digest, and if one looks at the various charts, you can see that the hits do happen sometimes overlapping and sometimes not overlapping timelines. Obviously, you identified sewer and water. We know those are critical needs. I guess we went, if I heard correctly at the beginning, we went for the moderate on water and the moderate on sewer. Can staff confirm when we made the decision in 2017, that's what we opted for in those two categories?
Yes, through the chair, water and sewer were moderate financial approaches.
And one assumes that as we see we're moving forward, we approved the bylaw the other day as part of the grant application for province. Debt financing is part of what is assumed for a lot of these projects. Is that accurate?
Through the chair, yes. We'll get in more into that in the detail when we look at the asset management plan and layer some of these different assets over one another, like you mentioned. But generally speaking, for large capital projects, we look at debt financing for a significant portion. And again, our replacement reserves are, the plan right now is for replacement only. So new assets are being balanced with those and debt going forward.
So growth-related assets are how are they covered, if at all, by development cost charges for new developments?
Through the chair, so development cost charges are a supplement to our capital asset planning when it comes to upgrading, drain, water, and sewer pipes. So those are a factor.
Right, but the DCCs do not imagine fully absorbing the cost for upgrades, so potentially there's additional costs there if significant needs occur. We're a fairly moderate growth or low growth municipality, so it's, I think, probably manageable over time. The 1.25%, though, this covers a basket of goods with the total asset value of $327 million, I believe. Being roads, drainage, facilities, parks. That's correct. we know that, and again, I don't expect the answer here, but I guess what we'll know hopefully in the next year is where the 1.25% may not meet our expectations. Is that fair, staff?
Through the chair, yes, those are things that we'll bring forward to council. This is the preliminary stage of the high level. Once we get into the more detailed work with the plan and where we're looking for, in these graphs and curves over the next 10 to 20 years, we'll have a better idea of what those look like and what financial approaches or adjustments will be made to the 1.25%.
Yeah, sure. And I appreciate that we're not going to have that today, only that probably, and I can say with one exception, this council is the council that made the decision in 2017 to go with that. That was a decision we made at the time based on the information we had at the time. None of us had a crystal ball, I don't think, that could have predicted quite the accelerated cost pressures that we've seen in the relatively short period of time that we've seen them. It was a daunting task then. It's doubly daunting now. But I appreciate the work that's being done, the finite detail, I guess. Appreciate the comment from the presenters about, if you're doing Keating Crossroad, what's in the ground there that needs to be replaced at the same time. Years and years and years ago, I recall, not in this municipality, but seeing a project where road was beautifully repaved, all the sub work was done, and within 2 months someone came along and just, dug out the entire road or a big swath of the road for a replacement pipe, and then you had uneven road base. So it's just one of those things that certainly we appreciate, and hey, if there's a cost savings, even if it's only a small one, it's efficient, and I suspect the residents would appreciate that. I think that's the end of my questions for the time being.
Thank you, Mayor Windsor. I'm going to go to Councillor King.
Thank you very much for the presentation. I guess at the outset, I'm just going to briefly mention that in my recent 10 or so years of forecasting with health human resources, it's a really fraught activity to try to predict so far into the future, yet important and necessary. But and with assets, with infrastructure, I don't know if it's harder or easier, but at any rate, it's difficult. You can clearly, by seeing the change between 2017 and today. And so with that in mind, I would first want to ask the consultants about uncertainties and planning for uncertainties. Of course, you can't know what you're uncertain about, but how do you include that within the consideration, given, for example, climate uncertainties and so many other uncertainties that we've faced recently? Who would have predicted a pandemic and these types of things? So how do you build that into modeling or considerations? That's one thing, given that if we look back 4 years, different story. So you can just imagine where this would be in so many years into the future. That's one question. I'll perhaps carry on and then let you answer. Yeah, one other thought was with regards to the point that this is all based on the existing infrastructure, not needs for the future necessarily. And so I would be curious to know what would be the implications if municipality ever did expand its urban containment boundary. So I would assume, I'm just making the assumption, that it's based on the existing planning model and the servicing in the existing urban areas, and that has potentially, at least the argument is the case, somewhat of a savings. But if you expand, then of course there's going to be increased costs, I would think. It was a good question about DCCs, and I still think we may need to then look at the degree to which those need to be updated to help even more recover costs. I did make the note. Thank you for whoever asked about that we had made the decision to go with the moderate approach in 2017. Yeah, in my mind, this is so related to climate in terms of this is climate adaptation as well. And so we do, I see them sort of together in terms of having to plan for the future. We want to make sure that any culverts and et cetera that we plan for are going to meet the needs of the future. So I leave those questions. If you have some answers, that'd be great. Thanks.
We're going to Mr. Wenninger or Ms. Bernier.
Thank you through the chair. Thank you, Councillor King. I think those are excellent questions, particularly around. I'll start with the uncertainties. I think that's the one I can probably answer the best within the scope of our work, and I might leave the other two questions to Mr. Ziegler to respond to. Yeah, so uncertainties. Yes, a lot of uncertainties here. We're dealing with, in the estimates, we're looking at essentially every asset. So if we were doing a project like at an engineering scale, we would be able to go out and say, we need to replace a pipe. Oh, the pipe is in this type of road. There's this here. We have to deal with that. And you can come up with a scope of the project. We obviously can't do that with every asset in a community. So we deal with it by adding a contingency. So that's, in terms of the costing, we add in, we know there's engineering and a contingency allowance in it to deal.
Do you have a, does your contingency figure factor, how do you come up with the correct figure based on other experiences, based on climate projections, based on?
No. It's based on the scope. So contingency is purely based on the scope of the construction itself. It does not consider, and this is where your master plans, like I'll respond to it in a second. This is where some of those plans that we mentioned to update, those are the ones that need to think, because of asset management plan, what we're doing within the scope of it, if you've got a 10-inch pipe, we know it's getting to the end of its life. Well, the asset management plan let's replace it with a 10-inch pipe. Now that may not be true. That's where the master planning and those other studies might come in, and they could model the whole system based on the scenarios that they're expecting and say, well, you know what, actually we can't replace that with a 10-inch pipe. We need a 12-inch pipe now because of the storm events we're getting. So that's a separate, and that's why we identify those master plans. These need to work together, kind of in tandem. So you need those master plans in place. So we know when we do go replace that pipe, we can go look at the master plan and say, are we okay to replace it like for like? Or in this situation, do we need to upsize it given the climate projections? So does that answer your question? Okay. In terms of the impacts of expanding the containment boundary, excellent questions. Again, probably something you'd look at when you're examining your OCP or some other studies. That's not within the scope here. It's a great question. Generally, they always say residential development does not pay for itself. It's spread out a long way. There's a lot of assets to support a residential style or a low density development. So I would just generalize, if you're absorbing, something that had a higher density or a higher tax roll implications, that would have a different effect than absorbing rural areas. And so then the reasons you might do that, I think, are something you really all talk through, obviously. But maybe Troy, if you want to address that a bit further.
Thanks, through the chair. Thanks, John. Not quite sure how to address that further.
If that answered the question pretty well, thank you for that. I did forget one last thing, if I might, it was your facilities assets replacement forecast bar graph. There's three spikes in it. One is the more closer to today, in 2024, et cetera, a bunch of spikes there. And then there's one a little bit in the middle, which seems to be reasonable. Then there's one back, way off in 2063, et cetera. What is the second one? What's that one off into the future anticipating in the 2060s?
Or the 2060s? Well, I think it would be, if we're planning on a 50-year life cycle for facilities, pretty high levels. I think you're just seeing a repeat replacement.
Not a new municipal hall by then or something like that.
I don't think so.
Okay, thank you.
Again, I think I really, not to take the charts too literally, like you point out, there's a lot of assumptions, and I think it's conceptual in that there's the investment levels ebb and flow, and I wouldn't want to have you believe that we can predict exactly in any year what might be expected. It's just reflecting there's assets that theoretically in that inventory that could need replacement or be replaced again within that time frame. So I couldn't tell you specifically what that spike was. We could certainly have a look at it though and respond to you.
Through the chair, if I may, we do have a variety of facilities and buildings throughout the municipality, in addition to our major facilities, fire stations, and municipal hall and public works yards. So there, it's not just limited to those. There's all the other facilities that the municipality owns as well.
Through the chair, if I can add, also when we're looking at the facilities, we're looking at it from a deferred maintenance perspective, and so that's what you're seeing on the chart rather than replacement of the assets also. So.
Thank you, Councillor King. I'm going to move on to next questions from Councillor Thompson.
Can you hear me okay?
Yes, we can. Go ahead.
Oh, good. Thank you. As you know, I'm out of town. I had sent some questions to Mr. Ziegler over the weekend. I have not been able to access my mail. So he was to respond and share those responses to other members of council. I'm wondering if it's okay, Mr. Chair, if Mr. Ziegler is comfortable perhaps reviewing responses to those questions.
Sure, we can do that. We did all receive copies of his responses today, but I'll turn it over to Mr. Ziegler if he wanted to speak to those as well for your benefit.
Thank you.
Thank you, Mr. Chair. I'll just go through the questions from Councillor Thompson and some of our responses. Question, what is the annual 1.25% increase applied to? How is it calculated? Each year taxes increases for other reasons, including police service. So what is the 1.25% of? So the 1.25% is the minimal increase adopted for general capital replacement in the 2017 plan. And each year, those funds are specifically set aside for future asset replacement. It's approximately $200,000 to $220,000 each year in our general assets, so roads, drains, equipment, etc., excluding water and sewer. The 1.25% is based on the prior year gross taxes and is included in our annual general total tax increase. So as in the budget guideline presentations, our average over the last 5 years has been a 3.22% increase for the municipality, and the 1.25% is included in that number. So doing that in 2017, I'll just mention as well, although it wasn't in the previous answer circulating, is by including that 1.25% in the annual increase, it's essentially taken that room away from other operating increases that would previously be supported by an increase for that tax rate increase. The next question is, remind me, does the average homeowner include all types of dwellings, units like single family townhouses and condo units? The shorter answer is yes, it includes all class 1 residential properties in our BC assessment. So it's simply the total assessment value for residential properties divided by the number of properties. Question, for water and sewer, is the percentage increase simply an increase in over the previous year's rate? Answer, yes. Question, do the dollar values increase every year above $25, let's say, for the average household as taxes increase? For example, as time went by, was the annual increase greater than $25? Answer, yes, it's based on the prior year tax rate or property tax amount, so it compounds over time. Question, would it be a reasonable idea to consider separating out climate change and active transportation as district levies on tax notices? I'm thinking about our recent motion to withdraw from a certain CRD service. This could help demonstrate our commitment to climate change. Yes, different budgets can be specific line items on the tax notice to residents, like the police is and our infrastructure and debt is, versus library and our general assessment. As discussed in my staff report, the 2017 1.25% tax levy, again, was not separated out from other items and is included in the overall general tax increase. Staff will put forward other options for council to consider in the new year with the asset management plan update. Question, what does increase resources and capacity internally mean? This was in reference to implementing our asset management plan going forward with the annual pipe replacements in water, sewer, and drains. And that is meant by, this means having enough staff with time available or external contractors to actually complete that work and get those pipes in the ground for those replacement programs. More on this and ensuring our organizational structure can support these programs will be brought forward to council in 2022. Question, 2021 asset management plan update themes, bullet 5. I would suggest that limit future growth would be a more neutral term than hamper, sorry. In a constrained ALR rural environment, there are limits to growth. Of course, not everyone will agree with me. Thanks. Question, community communication plan, great idea, but from my perspective, tough to satisfactorily engage folks face-to-face in the wonderful world of COVID. I recall several years ago when the asset management plan was first implemented, I was accosted on the street by an older gent who asked, why am I paying for infrastructure improvements when I'm no longer here? Answer, the true cost of infrastructure includes its initial construction, ongoing upkeep and maintenance, repairs, and future replacement costs. Municipalities, for municipalities, that means spreading those costs consistently out year over year so taxes and fees can remain relatively level and consistent and not have huge spikes in rates and fees in the future for large amounts of debt because there's not been enough ongoing savings or taxation capacity to pay debt. Last question. New service levels, high public expectations are a real challenge. Sewers aren't sexy, but kind of necessary, even though they're not visible. How do we temper public expectations? The community faces some tough choices to make now and into the future. This is an excellent question. A good example of this is the active transportation, which we've talked about greatly. This is a new infrastructure service level to the community, and a financial approach for new assets was not included in the 2017 AMP. As part of the 2021 AMP update, staff will bring forward financial options and for approaches for new assets for council's consideration. But yes, tough choices in those regards going forward.
Thank you, Mr. Ziegler. I trust Councillor Thompson that addresses your questions.
Yes, it does. Thank you.
Thank you. Let's go next to Councillor Newton.
Thank you. Thank you, Chair, and I truly appreciated the detailed report that was presented. It certainly highlighted a number of things that I think are challenging for all of us to consider. Without going into specific and great detail, I guess the overall concern I have is that in a relatively short period of time, from 2017 to 2021 or 2022 for the next couple of weeks out, we're looking at almost a doubling of the value of those assets, or at least the replacement costs of those assets in an extremely short period of time. And I don't even know if it's reasonable if the district can meet those needs under the current residents and households and businesses. That if we're looking at a doubling of those assets, and not necessarily just the value, but the replacement value, how do we expect the taxpayers to sort of absorb this going forward? There's been discussion from Mayor Windsor and Councillor King about looking at supplemental charges through the DCC charges that we're charging as development occurs within our district. But at total assets of currently today of 565 million and a population of 18,000 roughly individuals, I don't know, and I know it's broken out by household, and a 50-year amortization, that's $630 per person. And how do we, looking at sort of the effective management of these assets, is this even feasible? And I guess either to the presenter, if you're seeing this from other communities, the discussion, or to staff or Mr. Ziegler about how you look at the under the current sort of planning, do we see this as being reasonable, or are we going to be 5 years again? And the delta that we're seeing between costs escalating and the value that the community is able to grow with this escalation.
Thank you, Councillor Newton. Let's start with Mr. Ziegler.
Thank you, through the chair. No, excellent questions. I think I start out by saying, our 2017 plan was a very good start. It was a very thorough analysis and put some good financial approaches in place. We've done a very good job since that time of escalating our annual contributions for asset replacement. That will help us when we come to our 2021 financial approaches and what we've done well and where we can soften. What I said at the start regarding the escalation of costs, and it's in all of our things these days, whether it's our asset replacement costs or our housing or things of that nature, they are escalating, and like you mentioned, our tax base and our ability to increase revenue is limited. So it's a balance of those. But again, I think I'd reiterate by the next 2 decades, 10 to 20 years for the municipality, there's been a lot of work that's been introduced tonight. And again, I think that the plan we have in place now and some modifications we can make now will put us in good position to accomplish those tasks over the next 10 to 20 years, both with the savings that we have in reserves and the other capacity we have to take on some debt. But having said all that, yes, there will be some difficult choices for the district staff and mayor and council in the coming years of what we can afford to do. Anything to add, Mr. Winninger or Ms. Cullum?
No, thanks, Troy. It's a really good question. I think I can only I wasn't part of the 2017 assessment, so I can't speak to the numbers there. And I recognize there was a large jump in that, so I respect that. It does seem like a huge, quite a large surge there. The numbers, though, that we came forward with didn't surprise me, having looked at a lot of communities in the province. It's surprising how much infrastructure is really in place in a lot of communities. And I would say that you're not alone. The district isn't alone, and you're doing a good job at maintaining it. It's something. It's just, I think, I would just say as a society, we have to talk about and start to move forward with, and certainly not the expectation that overnight, you could jump up to some of these ideal funding levels. I think it's just important to start having the conversation. There's going to be a little more detailed work going forward, or what are some of the options, and what is reasonable? How do we balance out these numbers? How do we reduce those costs coming forward? There, again, through doing some good study work, there's maybe savings to be had in terms of relining a pipe, say for example, which we didn't look at necessarily within the scope of this. We're replacing like for like, but there could be opportunities to rehabilitate the infrastructure in lesser, costlier ways. So I think I always talk about asset management. This is just ongoing. It's continuous improvement. It's not, well, here's the study, this is definitive. It's, here's what we know today. Boy, it'd be great though. I think let's keep learning. But let's be aware too, where there's definitely areas where we know there's going to need to be funding. When we look at the AC pipe and some of this drainage infrastructure and the sanitary sewer, no question, that's going to need to be addressed in short term. The facilities are going to need to be addressed, and I think that's the conversation now for you all as leaders in the community to think about, and in context of what can you absorb and how do you go about it.
Yeah, and I certainly, the 2017 report was very good and certainly helpful to come and springboard off to where we're at today with a report, 5 years later. And so I was not meaning any disrespect at all to the work that was done previously. It's just a factor that we're seeing these costs escalate so rapidly, with the ability for what is the residents able to sustain, especially when we're looking at 70% of the land is ALR and central Saanich, and we're looking at how do we try and maximize that, and everybody knows that. Councillor King sort of alluded to a little bit, but I'd be curious how much of the work looking has to deal with climate adaptation and what to take into account for that. And I think we're just at the beginning of how to look at, analyze, and seeing what impacts that has when we're looking at these long-term assets and the impact of that. And so I think that's only going to add and escalate those costs going forward. With respect to drainage, and maybe to some degree some stormwater management, but there was no reference to Martindale Valley or Maber Flats in the report, which are two critical areas in the community. And then facilities, the 2017 report sort of talks about other facilities in the district that are managed or used by specific organizations. The Lions Hall, the Fire Museum, and the lawn bowling were three that were mentioned previously, but not sort of addressed here. And I hope that there's some sort of communication that's presented to those organizations to also reflect, given that if their expectations are to look at those assets as the users, to hopefully keep them informed of the loop, and what we're learning through this report is passed on to them as well. I'll leave it there for now. I think as a first report and first meeting on this, it was certainly eye-opening and certainly challenging decisions ahead.
Thank you, Councillor Newton. At present, I have no hands up from members of committee this evening. Is that the extent of our questions from the committee this evening? Okay, so seeing no further questions, I'm going to thank our guests for being here today. Mr. Wenninger and Ms. Bernier, thank you for your time and your presentation and your work on this. We are going to move on to item 4.3, adjournment of the Committee of the Whole. Moved by Councillor King. Seconded. No, we don't need a seconder. Never mind. We're in committee now. Seeing any discussion on that motion? Seeing none, I'm going to call the question. Any opposed to the motion to adjourn the Committee of the Whole? The motion is carried unanimously. We are now adjourned. We're going to move back to our council meeting. Item number 6, new business. We've got item 6.1, January 2022 meeting calendar. We've got an amendment.
Just
Oh.
a point of order,
Oh.
Chair.
Yes, Councillor Newton.
Sorry. Does anything need to be done coming out of committee of the whole to have this coming forward to a council meeting? Or is that just something staff will automatically do to bring forward?
I'll go to Miss Cullum.
Thank you, through the chair. That's something automatically staff will do, but that was a presentation for information. So we will be having another committee of the whole meeting in January, and then hopefully some resolutions will come out of that that will then be brought to the council meeting.
Thank you, Ms. Cullum, and thank you for Councillor Newton for the question. Now I'm watching for hands again. All clear. We're going to move on to item 6.1. We've got a recommendation that the January 10, 2022 regular council meeting start time be changed to 6:00 p.m. I would look for a thank you. Moved by Mayor Windsor. We are back in council. That means we do need a seconder. Looking for a seconder. Second. Thank you. Councillor Newton is the seconder. Any discussion on that motion? Seeing none, I'll call the question. Any opposed to that motion? That motion carries unopposed. We are now moving on to item 7.1. I'm looking for a motion to close the meeting. We are looking to convene a closed meeting pursuant to the following subsections of the community charter. 90 subsection 1, a part of council meeting may be closed to the public if subject matter being considered relates to or is one of the following. This is C, labor relations or other employee relations.
So moved.
Thank you. Moved by Mayor Windsor. Is there a seconder?
Second.
Seconded by Councillor Newton. Any discussion on the motion? Seeing none, I'll call the question. Any opposed? The motion carries unopposed. We are now going into closed meeting. Thank you, everybody. We will pause while we shut off the recording.